What's going on, everybody? Yo, coming to you guys from the moon tonight. Woo! Just kidding. But anyway, what's going on, everybody? Hope you guys are having a fantastic night. We have some great price updates coming on. We're going to do some price analysis. We're going to hit on the top 10 cryptos. We're going to do a long video. Stick with me to the end so that way you guys can see where all these top 10 cryptos are going. Thank you guys so much for joining the channel tonight. Hey, don't forget, I am winning and so are you. Let's go. Price analysis for January 20th. We're going to go over Bitcoin, Ethereum, Polkadot, XRP, Cardano, Litecoin, Bitcoin Cash, Link, XLM, and also BNB. We are going to cover these in this order. So if you came tuned in and you want to see your favorite coin, go ahead and fast forward to that coin. Feel free. Or if you just want to see it all and hang out and watch the whole video, I appreciate that as well. So don't forget to like and subscribe. We're almost at that 500 mark. We need to get there. So hit that button for me, please. I appreciate it. So Bitcoin price continues to drop, pushing select altcoins closer to their critical support levels. By the way, I know a lot of people are freaking out right now because the prices have dropped, and they've dropped pretty significantly today. And, you know, I've got a bunch of my friends calling me, hey, what do I do? Should I sell now? I bought at the top, you know, like, what am I going to do? So personally, I'm holding these coins. And if you guys have been following this channel long enough now, you know that there is holding crypto and there is also trading crypto. There is a difference. So if you are trying to be a crypto trader and you're holding accounts, good luck. It's not the smartest thing to do. The smartest thing to do is to get a brokerage account, use leveraged money, and day trade that way while you stack your chips in your cryptos and you just hold those coins over in your exchange or your hard wallet, whichever you prefer to use. When an asset is in an overbought condition and traders are sitting on large profits, even minor negative news or events could trigger profit booking. This seems to have happened following Janet Yellen's adverse comments on cryptocurrencies during a virtual hearing with the U.S. Senate Finance Committee. In the same meeting, Yellen also told Congress to act big in order to support the U.S. economy. Another round of stimulus would probably further weaken the U.S. dollar and drive investors into assets that are considered as a store of value. This means Yellen's comments may have inadvertently boosted the sentiment surrounding gold and Bitcoin. So what's interesting, right? So the news came out and immediately people freaked because what they're doing is everyone has made money that have bought into Bitcoin earlier. Maybe you bought in at 30,000 or maybe you bought in even earlier, but then it reached 40 and then you saw it go down to 37 and then you saw it to go to 36. And then Janet Yellen comes out and says this negative stuff. And then all of a sudden you freak out and you sell all your coins. And because everyone is selling their coins, the price is going down, right? So less buyers in the market. So the price has to come back down to a level where it has to go back to a price where people feel comfortable buying it again. As the fundamental factors supporting the current bull run are still intact, the institutional investors who have missed out on the rally at lower levels may use this current dip to build positions. Glassnode shows that large investors have been aggressively adding Bitcoin to their portfolios, and the number of wallets holding over 1,000 Bitcoin has risen to new highs. Since the start of 2021, 164 new wallets with over 1,000 Bitcoin have been created, indicating that whales are bullish despite the current BTC price correction. So let's study the charts of the top 10 cryptocurrencies to spot the critical support levels where buyers may start cherry picking. BTC USD, Bitcoin has broken below the symmetrical triangle pattern, but the bulls are currently attempting to defend the 20-day exponential moving average of $34,626. In an uptrend, traders buy the dip to the 20-day EMA as it offers low risk opportunity, and a bounce off of it reiterates the strength in the trend. The 20-day EMA is flattening out, and the Relative Strength Index, RSI, has gradually dropped from the deeply overbought territory to the midpoint, which suggests balance between supply and demand. If the Bitcoin USD pair sustains below the 20-day EMA, it could drop to the 38.2 Fibonacci retracement level of $29,688. The bulls are likely to defend this support aggressively. If they succeed, this level may act as a support of the range, while $40,000 could act as the resistance. The positive view could be negated if the bears sink the price below the 50-day simple moving average of 27,596. Such a move could open the possibility of a fall to the 61.8 Fibonacci retracement of 22,106. Okay, so here we see the price coming up and down. It's kind of going into this symmetrical triangle, as they mentioned, kind of pinching it off. The resistance line is up here and the support line is down here. This is your 20-day moving average right here, and you can see it went up way above the 20-day moving average, and that is why it started coming back down. The moving average acts like a magnet to price, and it will usually come back to that point, and then it'll run back up, come back to that point, and so on. Right now, the price has dipped below the symmetrical triangle, but it is still just above the moving average. And what they're talking about, potentially, if the bears continue their down push, it could come all the way back to 27,596 here. Or they're even talking about coming all the way to 22,106 for the ultimate pullback. But we're going to see if the bears are going to win this fight, or if the bulls will finally come back into the game. Because if you'll notice all these wicks down here, the bears are trying to pull it down, but the bulls keep winning it back, right? And the bulls do not want the price to drop below those lines. So we're going to keep that resistance level there. It is now a support level, obviously, and we're going to see if we can push that above the price and continue this uptrend to the 40,000 and then above. ETH USD Ether rallied to an all-time high on January 19th, indicating that the bulls are in command. The upsloping moving averages and RSI near the overbought territory suggests the path of least resistance is to the upside. Usually after every breakout from a resistance, the price returns to retest that level. The same has happened to ETH USD pair, where the bulls are trying to flip the $1,300 level to a support. If they succeed, this level will act as the new floor for the price. The long tail on today's candlestick suggests traders are buying on dips below 1,300. If they manage to close the price above 1,300, the pair may attempt to resume the uptrend. If the bulls push the price above 1,438, the pair could rally all the way to 1,675. Contrary to this assumption, if the pair sinks and sustains below the 1,300, the next drop is likely to be to the 20-day EMA of 1129. A bounce off this support will suggest the sentiment remains bullish, but if the bears sink the pair below the 20-day EMA, short-term top may be in place. All right, so here we have our uptrend line. We have our price trending up, and it's running up, right? So this was the all-time high on the 19th. This was the price dropping down all the way to here, and this long wick indicates that the bulls are buying back. Even though the bears are trying to push it down, the bulls are buying it back. DOT USD, after the sharp rally over the past few days, Polkadot DOT has entered a minor correction. The altcoin had today dipped to the 38.2 Fibonacci retracement level at $14.72, which is acting as a strong support. The long tail on today's candlestick shows the traders are not waiting for a deeper correction to buy, as they anticipate higher levels in the future. If the bulls can push the price above $19.40, the uptrend can continue to the next target range of $24 and then $30. Contrary to this assumption, if the bears sink the price below $14.72, the selling may intensify and the pair could drop to 50% retracement level of $13.28 and then to the 20-day EMA of $12.32. If the pair rebounds off the 20-day EMA, it will suggest the uptrend remains intact, but this support cracks. The decline could extend to $11.83. The deeper the correction, the longer it is likely for the uptrend to resume. All right, so here we can see the price was running up, running really far away from the EMA, which obviously we've seen over the last couple of pairs. The price does like to come back to the EMA. The RSI chart here is in the overbought territory, which is a good sign. And also the 50-day moving average is uptrending as well. So everything is looking good for Polkadot, except for this little correction on price. So we'll see if this is the end of it. But you can see as the price came all the way down to here, the bulls just jumped right back in and pushed that price back up. So are we going to see $30 for Polkadot shortly? Just keep an eye on that. XRP USD, XRP rose above the 20-day EMA, 29 cents on January 19th, but the bulls could not sustain the higher levels, indicating traders are offloading their positions on every minor attempt to rally. The price action of the past few days has formed a descending triangle pattern. If the bears sink the price below the 25-cent level, the XRP USD pair could drop to the critical support level of 0.169. A break below this level could resume the downtrend with the next target objective of 10 cents. On the other hand, if the bulls defend the 25-cent support and push the price above the downtrend line, the pair may raise to 38.5 cents, 0.38 cents, and stay range bound between the two levels for a few more days. A new uptrend could begin on a breakout and close above that 38-cent mark. So here you can see the range that this price is bouncing in between. It does have the 39 cent here, or really the 38 cent, and then the 25 cents where it's been range bound here. It is in a descending triangle pattern. The downtrend line is here. The RSI is low, and also the 50-day EMA is downtrending as well. And the price has closed below the 20-day EMA. So if this is to survive, we need this to really push above this downtrend line and then continue its uptrend. But for right now, it is not looking positive for XRP. ADA USD, Cardano. Cardano ADA has pulled back from its stiff overhead resistance at 40 cents, which shows short-term traders may be booking profits. The shallow correction and the long tail on the day's candlestick show that the bulls are attempting to flip the previous resistance at 34 cents into a support. If they succeed, the bulls will make one more attempt to thrust the ADA USD pair above the 40-cent resistance level and resume the uptrend. If they manage to do that, the next stop could be the psychological resistance level of 50 cents. The upsloping moving average suggests that the trend remains in favor of the bulls, but the negative divergence on the RSI indicates the momentum may be weakening. If the price sustains below 34 cents, a drop to the 20-day EMA of 30 cents is likely. A strong rebound off this support will indicate the uptrend remains intact, but a break below it will suggest the possibility of a deeper correction. So here we see the price. We've got the moving averages are both heading upward. The price is in an uptrend. This did come down and it did bounce off of the support here of the 34 cents level. That was previously a resistance. The only problem that they're showing here is this negative divergence, because if you can see the price trending up on the actual price line, but the divergence down here of the support for the price is trending down. So that usually means that a breakdown in price could be nearing, unless the strength of the RSI could rebound and get back in the overbought territory and resolve that issue. So we're going to see what happens here on this pattern, and then also be watching really closely with that. But as they're saying here, I mean, we could be bouncing up to 40 cents and even higher if it can push up above off of this support level here. LTC USD, the bulls push Litecoin LTC above the 61.8% Fibonacci retracement level at $157.69 on January 19th, but could not sustain the higher levels due to the bear onslaught as seen from the long wick on the day's candlestick. If the bears can sustain the price below the 20-day EMA, $145, the LTC USD pair could drop to 130 and then 120. And this is an important support to watch out for, because a break below this could signal the bears are back in the game. The flat 20-day EMA and the RSI close to the midpoint suggest balance between supply and demand. This could keep the pair range bound between 130 and 160 to the upside. A breakout and close above 160 may resume the uptrend. So we have the price. It came up here, came all the way down to the Fibonacci retracement level, really, really low here to the 0.28 level. And now it is on its way back up. But you can see on the actual wick here, it ran up to the 0.618, and then it also came all the way down here today. And then the bulls got back in the game and really pushed it back up. And it is above the 20-day EMA, which is positive. Also, the 50-day moving average is in an uptrend. The only thing is the RSI, relative strength index, is just it's kind of average right now. So hopefully this can be pushed back up now that it has bounced off the EMA and bump all the way back up and run up the above the 160, which then it breaks the 160 and it could be on a real run up to 200 at that point. BCH, Bitcoin Cash. BCH broke above $539 resistance on January 19th, but the long wick on the day's candlestick suggests the bears had other plans as they sold aggressively, trapping the bulls who may have purchased the breakout. The BCH USD pair dipped to the uptrend line, but the long tail on today's candlestick suggests the bulls aggressively defended this support. If the bulls can push the price above 539, a rally to 630 is possible. On the contrary, if the pair breaks below the uptrend line, it will suggest the bears have overpowered the bulls, and this will signal a possible trend change, and the pair could be taken on a drop to the critical support of 370. So here we have the uptrend line. You can see that it ran up, came back down to this trend line, and it is also staying above the EMA. The price came all the way down to the EMA and the trend line all touched the same spot, and then it immediately rushed back up because the bulls jumped back in and bought that position. So now we're going to see if it can break that 539, and then if it can run up to the 600s like they're talking about. Link USD, Chainlink. Link is currently correcting the sharp up move of the past few days. Aggressive profit booking by traders had pulled the price below $20.11, but the long tail on today's candlestick suggests strong buying at the lower levels. Both upsloping moving averages and the RSI in the positive zone suggest that bulls have the upper hand. If Link USD pair rebounds off the current levels, the bulls will try to push the price above $23.76 and resume the uptrend. The next level to watch on the upside is $27 and then $30. Contrary to this assumption, if the bears sustain the price below $20, the pair may drop to $17.77, which is just above the 20-day EMA of $17.58. If the pair rebounds off this level and rises above $20.11, the bulls will try to resume the uptrend. The positive view will invalidate if the selling breaks the 20-day EMA support. Such a move will indicate the bulls are not buying the dips anymore, signaling a change in sentiment. All right, so here on the chart, you can see we were in an uptrend, and then it broke down a little bit. It is retracing a little bit down to the 0.382 level, which is the $20.11. And we're going to see if it can rebound off this and continue its uptrend move. It is still significantly above the EMA, but the EMA is in an uptrend. Also, the 50-day moving average is in an uptrend, and also the RSI is pretty high up there. It's at 61%. See if it can push up there. So it's looking good for Chainlink. XLM USD, Stellar Lumens XLM continues to trade inside of the 26 cent to 32 cent range. The bulls tried to push the price above the range on January 19th, but failed, which shows the bears are active at higher levels. The sellers will now try to sink the XLM USD pair below the support of the range, but they are likely to encounter strong buying from the bulls. The upsloping moving average and the RSI in the positive zone suggests that the bulls are unlikely to give up easily. A strong rebound off the 20-day EMA 26.3 could extend the consolidation by a few more days. Contrary to this assumption, if the bears sink the price below the 26 cent support, the selling could intensify, and that may pull the pair down to the 50-day SMA of 20 cents. So here on the chart, The price ran up really nice. It came up here and it wicked out at about 40 cents, came back down to the moving average, the EMA of 20, and it wicked down there, and then it ran back up. And now it is sitting in this little support or this consolidation zone between 26 cents and 32.5 cents. So we're going to see who wins, the bulls or the bears. It does have an uptrend and an uptrend there in its favor. So we'll see if when these meet, that continues to push it up. The only problem is the RSI currently is in a little bit of a downtrend. So we're going to see if that can correct itself and start the uptrend again for Stellar and continue its really great price run. BNB USD Binance coin BNB tried to resume an uptrend on January 18th and 19th, but the bulls could not sustain the higher levels. Aggressive profit booking into the pockets, obviously, on January 19th started a correction that has reached the 20-day EMA of $40.99. If the bears can sink and sustain the price below the 20-day EMA, the BNB USD pair may drop to the support line of the ascending broadening wedge pattern. The bulls will attempt to defend this support, and if they succeed, the pair may extend its stay inside of the pattern. Conversely, if the bears sink the price below the support line, it will complete the bearish setup, which has a target objective of $26.72. But the pair is unlikely to plunge to the target level in a hurry because the bulls could offer strong support at $35.69. So here you can see the ascending wedge support line of the ascending broadening wedge is here. And you can see the top of the line there. What that means is down here it was kind of skinny, and the wedge is actually widening out as it goes up the wedge, which that could indicate a downtrend coming soon. Also, the RSI is in a bearish divergence. Again, if the price is going up, but the RSI is going down, that is divergence, which can show signs of weakening of the actual strength of the buyers, meaning there may be a farther dip and correction coming soon. And the views and opinions expressed here are solely those of the author and do not necessarily reflect the views of Cointelegraph. Every investment and trading move involves risk. You should conduct your own research when making a decision. All of this is speculation. This is not any trading advice or any financial advice. Please reach out to your financial advisor for that information. This is all for fun, great information. All right, guys, so at this point, make sure you like the video. I need you to like the video. You've been here all along. Thank you so very much. Click that thumbs up. Also, don't forget to subscribe. We are so close to 500. It's like the charts, right? Our channel is reaching up to that 500 resistance level, and we need you to click that subscribe button so we can bust through with a good, strong, bullish candle all the way up to 1,000, where we really need to be. 1,111 is our target profit taking level for our channel here at Win with Ryan. So I am winning, and so are you. Thank you so much for watching the video. Talk to you soon.